think one of the ways that we started up this home shopping season was really different than the previous year, in that the previous year prices were still moving really, really quickly. Right. Very few listings had price cuts. This year felt much, much slower. Home value appreciation is slowing down fairly significantly in a lot of those expensive markets. The percentage of listings that have price cuts have shot up as the housing market starts to transition, and a lot of sellers are caught with outsized expectations of what their homes can sell for. Things are really, really slowing down in a significant way.
The cost of building has gone up, a shortage of workers, the cap on the SAL deduction. I mean, we can get that whole litany that's been there for a while. It's not going to change anytime soon. So are lower rates going to be enough to try and juice this market beyond those hurdles?
Well, the recent drop in the 30-year mortgage rate gives us a little bit of a reason to believe that this slowdown won't last very long. I mean, it is advantageous for buyers in order to lock in that much lower rate in terms of their monthly affordability. And because slowing housing markets often means that overall inventory rises as more homes are left over from the month before, that means the buyer might actually have a better experience. It can spend a little bit more time in order to make that decision. So we might see more and more buyers actually returning, and that'll stabilize things out again. And we might see home values increase by the end of the year and get back to hopefully a more stable pace than what we had experienced over the last 3 years.
And then we have, it's not quite a trend yet, but we are seeing some of these major corporations. Amazon's doing it in Seattle, now Google in Silicon Valley, where they're putting a great deal of money into build homes for their workers and for others, for those who couldn't afford it otherwise, bring in more affordable housing to some of those areas. We're going to leave it to the private sector, the non-home builders, to try and solve this problem, are we?
Well, I mean, I think the really big rub is that, builders aren't really building at the same pace that they had been historically. We're really at a low rate of construction for a lot of fundamental reasons. You mentioned them a bit earlier, right? The cost of construction, the cost of land. These things are hard to overcome, and so we need some kind of intervention to change the course of things, where the course of things was down payments getting more and more and more prohibitive as home value appreciation outpaces incomes. This kind of intervention is trying to address that issue. Whether or not this would even be enough to address housing affordability is actually a big question. In some ways, getting more denser, make it easier to build closer to jobs on a much larger scale than what we're seeing now is really what's needed. Getting that done, that's a very open question.